Hello, investors. This is Todd Thomas, Associate Portfolio Manager with Revere Asset Management. Today is Saturday, April 19th. The time is 3 o'clock p.m. Coming to you from Boca Raton, Florida, to go over the Revere Roundup weekend walkthrough. Today, we're starting with the market gauge. We're in protect mode across the board with 4 down red arrows. However, we do have a yellow sub arrow on the leadership, as in general it was a positive week and the leaders as a group acted pretty well. Mostly the market was dragged down by the Magnificent Seven, led by Meta and Nvidia. Highlights of the week: both Nvidia and AMD announced a 5.5 billion and 800 million charge-off respectively to account for export restrictions to China. TSM reported slightly ahead of expectations, decent gross margins. However, the stock was flat. ASM Lithography announced that their earnings and said they could be at the low end of their $30 to $35 billion guidance due to customer uncertainty. China halted exports of key rare earth minerals to the U.S. One of the only U.S. rare earth companies, MP, ceased shipments of their concentrate to China, but they're bringing online at their factory in California and fast-tracking heavy rare earth separation and bringing magnet production online to Texas. United Healthcare missed with a Medicare cost situation going higher, and they expected to remain high. That stock was down 23% on the week. Meta started antitrust trial with the FTC. They claim that Meta abused monopoly power with Instagram and WhatsApp. On a positive note, Lilly scored with a successful final phase study for its diabetes and weight loss pill, where nearly 2/3 of patients experience a big enough A1C reduction to no longer be considered diabetic. Patients lost an average of 8% body weight. Rates of diarrhea and vomiting declined, and no patient had serious liver side effects. Currently running additional tests for obesity. Palantir also finalizing a contract with NATO, which is great news. And Netflix came out with a beat and raise quarter on Thursday night. So I'm going to go over some of the highlights of that quarter. On the sentiment front, again, fear elevated. A new number came out on the NAAIM. This is professional money managers are only 35% net long. This is the lowest since the 2022 bottom, so that's positive development. Also, the Bank of America April Global Fund Manager Survey saw the 5th most bearish fund manager survey of the past 25 years. Again, we're on follow-through day watch still this week after the week before last Monday washout. So fear has been running thick throughout the last 2 weeks. On the earnings front, several companies reporting, including Tesla on Tuesday, Intuitive Surgical, Boeing, O'Reilly, Chipotle, Alphabet, Intel, as well as, let's see here. That's about it. Veritiv on Wednesday. Here's the skinny on the Netflix earnings. They came out at $6.61 per share, which was 94 cents better than the consensus. Revenues were up 12.5% to $10.54 billion, slightly ahead of estimates. Operating margins were well above estimates. And they launched an ad tech platform in the U.S. and is on track to roll out its remaining ads platform. They provided upside guidance for the upcoming quarter and the year. So great quarter out of Netflix. This was a conference call summary. They believe they have a lot of market share to capture. Currently they only have about 80% of the market. And their biggest opportunity is in the 80% of the entertainment space that neither them nor YouTube has. They believe they're still in the early innings of the game too, in games. And of course we have live entertainment, which remains a small part of their spend and their content, but they're also doing the NFL again on Christmas Day. So they're investigating podcasts, and although they're no longer giving guidance on their subscribers, they haven't really seen any change, which is good news. And if they do go into a recession, they believe that entertainment will likely hold up well. On the heat map front, pretty much green across the S&P 500. Notable standouts: NVIDIA down 5.65% on the 500 or the $5 billion charge off. Again, Mag 7 red except for Apple, which is up. Tesla down 4%. And Meta and Google. Meta was down 8.2%. Lilly was a standout, up 16% on the new weight loss pill. Energy rebounded. And again, the defensive area continues to look good. On the sector front, VIX was down 10% on the week. Semiconductors down 1.2%. Gold continued its weekly run up 4.7%, and silver was up 4.5%. So green across the board this week there on a shortened week. Going to the death cross, we entered the 1, 2, 3, 4, 5, 6, 7, 8th time where we're now going lower post death cross date of 4/14 so far, and we're only a few days into this new death cross. So far to the low, we're at a minus 3.43%. Again, out of these times, we've averaged about 8.54% downside over the next 2 months from the initial death cross date. So we're going to be watching that. Again, they've ranged anywhere from a high of 14%, 10% a couple times, 5 and 8%, and then COVID being the lowest at 3.7. So will this be lower than COVID, or will we continue over the next few weeks to go on and retest those lows and maybe get into that 8, 9, 10% area? Time will tell. All right, so going to the charts. Let's start with the S&P 500. S&P was down slightly on the week, 1.5%. Again, after this big washout week, the week before, just small give back, and mostly from the Magnificent Seven. NASDAQ down worse, 2.6% on the Mag 7. Q's 2.27, again, cap weighted by size, dominated by Mag 7. RSP was slightly positive on the week. The equal weight was only down 0.64%. Russell was up 1.1%. VIX fell on the week 21% below 30, which is a good sign. Dollar was down again 0.7%. Bond yields crept back on the 30-year. The 10-year bonds were down to 4.34%, still above 4%, but did back off from the prior week's massive upward move there. And of course, the bond prices on the 20-year TLT were up 0.7%. Bitcoin with another tight week, coming in at 6 tight weeks. And let's see here, the daily chart. Still below the 50-day, but now the 21 is upward sloping, and the 8 EMA is crossing up back through that 21-day. Next stop is a move back above the 50-day. Semiconductors down 3.3% on NVIDIA. Gold up 8%. Silver up 4% on the week. I'm sorry, 1.3%. Oh, that was a daily, sorry. Yeah, 1.2%. GDX up 2.4%. Europe with a positive week, and the Mag 7 down 5.3%. So that segues us into the individual Mag 7 charts, sorted by the change on the week, with Apple being the strongest. Apple down 5.59% on the week. Tesla down 4.3%. Meta 7.7%. Amazon 6.63 on tariff worries. Microsoft down 5%. And Google down 3.8%. All right. Finally, let's get into the watch list. Watch list today sorted by industry group rank. And gold is the number one group. I'm not displaying any gold stocks because they're all out of buy range. And there are some decent looking stocks. Philip Morris with another positive week, up 1.5%. Incidentally, this company's been paying a solid dividend for 55 years and it pays a 7% dividend. They're growing single digits, but they're dominating in the smokeless tobacco area, and the stock just continues to hold in there with a 7% dividend. Same with BTI. Cardinal Health, strong this week. COR in the medical wholesale drug supply area with a positive week. McKesson in the drug area. This is number 3 industry group. Again, pretty defensive area, but strong. And Stride with a relative strength making new high on the week. And this is number 4 industry group. The stock had a beautiful earnings gap here. Just rode along its 21-day, really only closed below it one day. Continued to move higher and then had this gap down. I think that was on government funding cut fears, but recouped back above its moving averages, and that looks decent. Kratos Defense, relative strength making new highs, very flat on the week. That's on our watch list. This one doesn't meet our volume requirement. Northrop Grumman, some of these defense areas with the KTOS and the Northrop Grumman look good. Netflix trading over 1,000 in the aftermarket, should be breaking out of this nice double bottom base. Is definitely on our ready list. Been going over these Indian banks, and those finally broke out of this nice cup with handle base. Still in the pivot zone. HDB blasted past the pivot zone this week in the cup with handle base. Been talking about BJs, and that's just hanging in there. Ollie's still working on this double bottom base. Got above it here last week, but kind of backed off. Held its 21-day. So Take-Two Interactive, very tight since this earnings gap. Coming up with earnings next month. Sprouts Farmer, relative strength making new highs. Casey General, new highs on the week. T-Mobile, strong with relative strength making new highs. We've had that on the list for a while. Guardian Health with cancer diagnostic testing. Doesn't make money, so if we did take a position in this, it would be very small, but again, very solid growth. And this cancer diagnostic area is extremely strong. O'Reilly has earnings this week. 3-week tight. AutoZone reported earnings back here, but still holding the 50-day moving average. And Copart in the automotive auction. I don't have this on here, but CRCVNA looks good too. But again, below it's all its moving averages, but I'm going to watch this to see if it kind of pops back above that 50-day. So let's go on to Dutch Brothers. Again, more of a fundamental story, technically not quite correct yet. Possible buy above this downtrend line, maybe this downtrend line here, but still has a lot of work to do. It needs to get above the 21-day and then it has a declining 50-day. But fundamentally wise, they're opening over 200 stores this upcoming year, and that is a area where they're only in 10 states right now, so it definitely has a growth story. And Darden Restaurants, positive on the week. Spotify, another stock on our ready list, slightly below just a flattening to downward sloping 50-day, but a good follow-through day this week. And we could definitely be in a few of these stocks. Duolingo still trading below its 50-day and 20-week moving averages, but again, that downward sloping 50-day, which a lot of these are, there's only a handful that are above it. Primo Brands have had this on the list. Definitely a subscription story in the water delivery area, as well as they manufacture and bottle pretty much every major brand. Some of the beverage areas look pretty good because they're somewhat recession-proof. Celsius being the other one. Just been trading dead flat tight here. And right in this area, and a nice breakout over this high could be, let's see, that high is 38.35. Personally, I'm long a small position in this stock. Crowd strike here with also a double bottom base, kind of backed off as it tried to retake the 50-day on the week. Rubric, also a double bottom base setup. Some of the natural gas stocks popped this week, possibly on them being beneficiaries of some trade deals, but relative strength making new highs ahead of price. MicroStrategy was able to recover the 50-day moving average, and now the 20 is crossing above the 50-day, so this looks interesting. Axon still below its 50-day moving average as well as its 20-week moving average, but again, after this massive drop on this week, after they had a falling out with one of their partners, stock is close to reclaiming the 50-day moving average and got above it for a couple days last week. But that average still declining, so that stock needs a little bit of work. Geo's been a good one. They're a beneficiary of the Trump administration. Walmart reclaimed the 50-day. Palantir, another stock on our ready list with a nice double bottom base. Tried to break out of it this week, but pulled back, shook out below the 50-day and closed the week above the 50-day. So that looks pretty good. Yeah, actually another natural gas play. Make My Trip an Indian play, reclaiming its moving averages, but still has some work to do. Casella Waste broke out this week out of a flat base. Again, this is a defensive stock. Williams in the natural gas storage area looking better. eBay another week where relative strength is making new price highs. DoorDash, double bottom base setup. Chewy is a stock that got back above its 50-day moving average after this massive stage 3 decline. And a cup with handle breakout here, so it's a base on base pattern. Just reported earnings back here. Stock pulled back, but reclaimed the 50 days, so possible turnaround play. TGTX, after a shakeout below the 50-day and all its major moving averages closed positive the week before last, then advanced 4.39% this week. So I retook a position in the stock. WGS with a blue dot, but down weak. ADMA had a very strong showing this week. In the plasma area, they pretty much are vertically integrated throughout the whole plasma ecosystem, and that broke out of a nice cup with handle on some big volume here. 2 big days of volume here. That's what you want to see on your breakout. So that looks very good in the pivot zone. Bellring Brands, maker of protein shakes and powders, sold at Costco. Blue dot, setting up in the stage 1 base, guide wire, double bottom base, and finally Bitcoin, which we talked about, above its short-term moving averages, bounced off the 200-day, now approaching possibly this declining 50-day. And Penumbra hit my alerts this week with a double bottom base setup in progress. Very tight multiple day setup here. Robinhood still a lot of work to do here, but this is a fundamental story that we like. Eli Lilly with big volume on that new oral drug phase 3 result. Reclaim the 200-day on a short-term basis, but again, coming off this V here, might need a couple days to recoup, but looks good. When Uber got above all its moving averages this week, closed above the 50-day, and that's definitely on our ready list too. Lifetime holdings slightly below our volume requirements, but relative strength leading on this ahead of price, and again broke out of a double bottom base or approaching a double bottom base this past week, but above all its moving average sitting there tightly. And Thomson Reuters broke out last week. Not a big moving stock, but after kind of breaking down to the lower end of this range, shot up last week. Fastenal gapped on earnings and relative strength making new highs in TJ Maxx. Also broke out of this double bottom base only to get kind of knocked back in, which again, in this typical bear market action, this happens a lot. That's it for the watch list. So again, still watching for a follow-through day after the week before last washout on Monday, as well as huge volume. And then this week, constructive action in the leadership. So looking better, but still a lot of work to be done. So in summary, if you'd like to contact me, my email is todd@Revere Asset. You can follow me on Twitter. This is my handle on Twitter. If you'd like to become a client of Revere, please contact us at 855 Real Wealth and ask to speak with Dan Stewart or Don Vandenborg. Thank you, and everybody have a great weekend.